here with ASML, you can see the highs were in the 870 range. We're taking out these, or attempting to take out the 750, 760 mark here. You can see we're right back at those levels. A little extended on the short-term time frames, but longer term, this pattern looks like we're going to go up here and challenge these highs, just like you've already seen in a lot of other individual names.
Next one will be BLV, if you want to pull it up.
BLV, yeah. So this is a Vanguard long-term bond ETF.
Yep.
This is going to track your long duration bonds. It's very similar to TLT, which we've talked to you guys about and wrap numerous times. I actually think you're probably going to want to hold this in your IRA. This is not financial advice, so talk to your own advisor, broker. But in terms of where we are in bond prices and yields, I think you've probably got a chance of this recovering. I think you probably also need to factor in what your allocation and your IRA looks like. But you can see 101 was the peak in BLV. We're trading at 74. First sort of target area would be all the way up here at 84, near the moving average. Let's see if we draw that for you guys real quick. You can see that here. So, I wouldn't give up on long duration bonds. You can see we've got a MACD crossing over here. This is a longer term monthly, chart. Very, very similar, going to track the TLT. So if you're looking for us to give you, updates on BLV, you can just look at what we're saying about TLT as your guidepost.
Beautiful. Thank you. These annotations make the video way better. See that?
Yeah, man, I'm sure that's great. I completely agree. Should have done it to begin with. Hey, if you want to go back, it's because it's still recording. Here's Carvana. Let's
this is
look
for
at that
David's
weekly,
question asking about Carvana, CAVA.
Yeah, let's look at Carvana.
Oh, you're the man. Thanks.
On a weekly. You can see this is kind of one of those poster children. 373 peak, got all the way to $3.55. Huge recovery thus far off the bottom. We're at 58. I would say this potentially could rally all the way back up here in this 150 mark area. This looks like what we got is an inverse head and shoulder right here. And you would want to see this just basically continue up from here and break this support, or sorry, this resistance level right here conclusively, and you should be off and running.
About Costco, and that is from Traylor McClellan. She asked about them because of they declared a big dividend.
Okay, so Costco is one of, if not the one of the best consumer staples, retailing companies in the world. If you're going to buy and hold, a company in the space, Costco is probably one of a handful you would want to own. If you look at the long-term chart, you can see it's just a very consistent upward rising pattern. My only problem here, wouldn't enter here. We're really, really extended. You can see on this chart, there's a pretty good picture of just how sort of steep the run has gotten. We call this sort of a parabolic move. You can tell in the RSI here we're overbought. That doesn't mean you sell per se if you're already in it. So if you're a long-term holder, you just maybe brace for a little bit of consolidation up here. But once this stock consolidates and establishes a range, maybe here or even pulls back closer to 620, 630, that would be the time to maybe reestablish a long position. So if you're in it, you probably just want to stay in it. If you're not in it, you don't want to buy here, but you want to look for some sort of corrective opportunity to get in as this overbought condition gets worked off. A lot of stocks out there like that, guys, where short-term, not really optimal entry points. You'd have rather been buying down here, obviously, back at the beginning of November. You want to look for something now that's closer to its base. I think, we've shown you a few stocks like that recently where you're buying closer to the pivot. In fact, ASML, which was a question we just got, that'd be an example of you buying closer to the pivot.
Beautiful. Thank you, Tracy. Next one is from Norm. He asked about Google.
Google is, quite frankly, it looks like it's breaking out here. Going to run to new highs. I mean, we are at resistance, but I don't think it's going to be able to hold it in here. Out of all the major tech companies, Google's one of the most fairly valued. Got a nice sort of technical setup here. Obviously, a great AI story, clearly a cloud story, and I think like Amazon, Google is really growing into a preeminent AI story and name. So I like Google here. I think if you are looking to add to a major tech position, this is actually probably one of the more optimal names to enter right here. So Google's a go, along with Amazon and Nvidia, all sort of looking at potential new highs in the works in pretty short order.
I love it. Thank you. Thank you for the question, Norm. So next one is from Jeff Fleeman. He asked about ePlus. Symbol is PLUS.
This name I'm not as familiar with. A little IT company, $2.15 billion market cap. Stock has just been on a torrid run and continues to just rise every day. This one's going to be one that you're going to have to probably manage yourself. I don't have a lot of value add from an analytical perspective. I do know the company and what they do. I'm not completely sure what is driving the stock up every single day. But after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 up sessions, might be time to ring the cash register. And thank the stock trading gods for what was a great trade.
Beautiful. Appreciate your question, Jeff. Last stock specific question is from Russ W. He asked about AVGO, Broadcom. He says, is it overpriced and is there an entry?
So just an incredible announcement from Broadcom this last earnings go. You can see the subsequent buying flurry that came in to the stock, both in price and volume. This is one of the top names in semiconductors. If we zoom out and look at the longer term time frames, let's go back and look at a 10-year chart on a monthly basis. You can see the stock pretty much just goes up. We are a little extended here, like we are in a lot of names, but I'm not as concerned with this one in particular as maybe some others. What I would advise you do is to take a look at the daily here, and let's zoom in enough so you can see. Look, we've had this run. Looks like we're trying to maybe pull back a little bit here. I would let this thing trade sideways around 1150 for a few more sessions, maybe even into the beginning of next year, and then look for some sort of entry point when we're not quite as extended. So this would be one of the names that I would suggest that you maybe buy on the first pullback that you see at the beginning of next year.
Beautiful. Thank you. Next your question, Russ. So we have just a couple more quickies from, we have another one from Russ. He's asked about the effects of inflation on the indexes, and do they rise with inflation? How are they linked?
So this is a good question, and it's one that's quite frankly too lengthy to answer in a short little blip. Okay, yeah. But what I do like about it is it really is in line with something that we tell the guys all the time about why they have to get in the game of the stock market, and if not stock market, then something maybe like real estate, where you can ride the asset price appreciation that is caused by inflation. So to answer the question more in depth, we're going to actually discuss this on the next call briefly. But what I would summarize with is that, yes, inflation causes prices to go up of both the things that you consume and that you need. It goes up at a pace that is far in excess of wages, and therefore you have to become a speculator and or investor in the stock market or in real estate in order to ride the subsequent asset price inflation that comes as a result of inflation as a means of surpassing it. So what that's a long-winded way of saying is that if you want to outrun inflation, you got to get into asset price appreciation gains, either in stocks or in real estate. Those are pretty much your only choices, or some sort of privately held business. But if you're a wage earner, unless you're extremely skilled or have some sort of position of being able to provide a service at a really, really high rate, your wages and your earnings are probably not going to keep pace with inflation. And the only sort of valve that people have to stay ahead of that game is to get into this game with us, to get into trading stocks and maybe even speculating in real estate if that's a path you choose.
Appreciate that answer. So our last question is my favorite one from Doug B. Says, to be institutionalized, Bitcoin will have to be tracked and regulated, which seems to defeat its purpose. Won't that suppress the interest and value of Bitcoin?
So this is a good question. Let's break it down into its components. The idea that Bitcoin isn't tracked now is inaccurate because it is very tracked. It is very traceable, and the blockchain is public domain. So, from a being tracked perspective, it's already pretty much out there. Now, as it relates to the regulation part of the institutionalization question, I think in this particular instance, the answer is no, because what is happening is that regulatory framework is going to allow a huge number of people and dollars to flow into Bitcoin specifically, and then maybe whatever other ETFs are launched in the coming years. Probably Ethereum will be next, and then there'll be others after that. But the point of institutionalization as it relates to adoption and sort of regulation, I would disagree that by having a regulated vehicle that people can access via their brokerage accounts, their IRA accounts, and know that that asset is in some sort of custodial relationship that they can count on, and make it a legitimate option within that structure. It brings in so many new buyers to a market that it's hard to explain the type of money that you're potentially opening the floodgates to spill into this teeny little $1 trillion market that we call crypto. So the answer to your question is probably no, because one, you're probably a little bit misguided on how traceable and trackable Bitcoin already is, and then two, the regulatory framework that's going to come from a ETF and the ability for people to buy it in their regular brokerage accounts, it's just too big of a positive from a money flow perspective. And I think, quite frankly, that's why you've seen the price of Bitcoin rally so vigorously off the bottom, and it's still, quite frankly, rallying right now.
Would it be fair to say that it's a good question because there probably will be some kind of negative suppression on its value from what they're describing, but
okay, so now that's where you're getting into.
The positive value of all that institutional wealth being able to come in now easily is
now
just
you're getting into
way greater, right?
Yeah, you're getting into a longer term question, which is, does the financialization via ETFs of something like Bitcoin, is that a means of control by the legacy financial system over long periods of time? The answer is yes. So I would look to gold as the example that Bitcoin could follow, meaning if it grows big enough and the dollars get large enough and it is institutionalized enough to a certain degree, then yes, those vehicles will be responsible for pricing that asset class. So I guess if Bitcoin is really successful and it gets grows to something like several $1 trillion, the gold market's like 10 trillion, then maybe Bitcoin becomes a several $1 trillion thing. Well, then yeah, the flows that come in via ETFs and whatnot are going to dominate the price action.
Right.
So if the question is, by further institutionalization, do you have greater control or influence on pricing from legacy financial institutions? 100%, no doubt about it. But right now, we're not at that phase of the development of this thing in Bitcoin or crypto. Right now, you're at sort of this $1 trillion creation that has been built off of retail money that was willing to take a lot of risk or go into some sort of strange custodial situation or use a third party intermediary that was questionable to get access to this thing called Bitcoin. So that took a leap of faith by a lot of people. By removing that point of friction and allowing, a layperson to buy that in their brokerage account, an IRA, that's a part of, the institutionalization of this thing is early, and that leads to higher prices. So we're not at that point of, these ETFs and derivative contracts and futures contracts being used to control the price of Bitcoin. We're just not there yet. Right now, we're at a point where literally trillions of dollars in money can now easily access something that has basically been cut off and required you to jump through hoops that either made people uncomfortable or were technically difficult. And that barrier to entry is being removed, and it's going to probably result in some sort of dramatic repricing of the asset over time. I think it becomes a multi-trillion-dollar thing, which means 2 or 3 X's from here.
Awesome.